Gold on H1 trend line has tested lower trend line 3 times and upper trend line 2 times. On intraday perspective, sell is on high and buy is on low, keeping in mind the 4 hourly time frame, which is also bullish. Overall price is bullish, but counter trend is possible right now since we have entered the reversal counter trend range. On H4 time frame, Fibonacci retracement was caused by Monday, Tuesday, and Wednesday Powell testimony speech, followed by a soft CPI data, and of course, yeah, Bank of Japan $22 billion yen intervention on Thursday, which sent gold higher as fear loomed in the market over weak dollar. Gold was considered favorite among investors. On day one time frame, we can clearly see that psychological level for 2400 and 2300 is key support and resistance zones, levels, or whatever you can call them, and the market is going to respect these levels. All the economic indicators we have currently right now, either they are NFP or CPI or PPI or PMI, they they all indicate that Fed have all the data which they required to cut interest rate. Even the FOMC members said that they have all the data to be confident enough to cut the interest rate. For current rate cut scenario, all the fundamentals are bullish. All the technicals on day one time frame or monthly time frame or weekly time frame, they're all bullish. Okay, even all the metals such as silver, platinum, and other, they're all bullish. But now, as we can see, we are in the psychological level of 2400. We have to expect a sideway correction that's going to take place right now this week. And when the price hit 2400 for the first time, the FOMC members asked Fed that if the monetary policy is restrictive enough or not. And last week, in Powell testimony on Tuesday and Wednesday, he mentioned for the first time that monetary policy looks restrictive, but not intensely. First time he mentioned it directly about this, and they are giving repeatedly warning that financial conditions index are not tied okay, and they are really east, which does not fit the rate cut scenario. So Fed has either have to make a hawkish rate cut before the September, or they have to find way to tighten financial condition index. Otherwise, the rate cut is not possible. On Monday, when the market opens, we're gonna have one more Fed speech, and this speech is really important because the Fed has to make a quick decisions, because if the Fed delay till September for rate cut, this stance gonna be taken as a hawkish stance, and gold will drop, which is according to our plan this week. That if Powell is unable to give a clear signal that he's gonna cut the rate before September, it means that it's just a stock, his gold is gonna drop. But if he clearly mentions that there's gonna be a rate cut in July or before September, that means it's hawkish for gold. And gold might break the 2450, but it's gonna be a fake breakout. Previously, the Goldman Sachs mentioned that at the year-end second quarter, gold is gonna reach 2700, followed up by Citibank last week, which mentioned that gold is gonna reach $3,000 in the second quarter. But we have to keep in mind that Fed is not gonna take in any kind of pressure from any current government or upcoming elections. Fed is free to make their decisions. So Fed have already forecasted with one rate cut in June, FOMC, but market is pricing in 4 rate cuts this year. And in September FOMC, it's expecting 50 basis rate cut, not 25. Okay, keep that in mind. This is really important. This Monday is really important. Fed policy speech is really important. And one more thing I want to mention over here is that, as you can see on the day one, this is a Philip curve. Okay, this is all a Philip curve, and this trend is ending. This trend is started way back in 1800, and this trend is about to end. According to the Philip curve, this was what do you call it, near 2450. If the market like just as I mentioned earlier, if market breaks this 2450, it's going to be considered a fake breakout, and then there's going to be a panic in the market. There's going to be FOMO sale, but as we can see that has yet to come. And as for now, according to the Phillips curve, the long trend has ended. So keeping that in mind, if today during Powell's speech, if he does not give direct signal that the market is that they're gonna cut rate hike, they're gonna do a rate hike before September, is gonna be considered a really hawkish stance, and the gold is gonna drop down, and the market might drop even further. And this weekend we saw the assassination attempt on Donald Trump. So currently the market has just opened an hour ago. Keeping that in mind, dollar is pumping. The DXY opened with a gap up, straight gap up, and the market is currently dropping down. And on a 15-minute time frame, you can see that gold is dropping. Right about 2 hours, 3 hours later, the Tokyo is gonna open, and I'm expecting a sideways correction down till 2375 on intraday perspective. But if the market is successful in breaking past this barrier, we might see is it retesting the 2368 zone of Fibonacci, and then again the 2349. So these levels are really crucial for swing trader. Most probably, if you are selling right now, is the best area for a sell is 2415 till 2410, and just open a sell and let it run and manage your risk reward, and then let it run for the weekend. And you're gonna have a really nice profits, because the market is gonna drop down. It might take 2 weeks, but if you have a one sell trade open from here, you can leave it, let it run. And if you can afford to open more than one entries, you can open one for a swing and one for scalping. You can like let the long trade run and just scalp the way down on lower low and lower high. And that's it for the day. But just keep in mind that there is no major news except Powell's speech on today, on Monday, on 15 January. And that's it for the day. So good luck this week, and please like and subscribe this channel for more trading setups and weekly analysis. I hope this was informative. Thank you. Take care.